Welcome back to Golden Rule Radio.
Welcome back, Robert.
Welcome back, Miles.
Where's Tori?
Tori's not here, so we won't cover fundamentals today. We'll just cover technicals and other things that we think are affecting the price.
And what a great place to start on a gold show, Robert.
Oh, right here in the beginning of June. June 3rd, Wednesday, we're recording, and June has been seasonally a weaker month for gold, and that's what we're seeing. Gold's down below 1,700, as we've talked about, hoping for this pullback. How far down do you think we're going to have this pullback take gold price?
Well, Robert, gold did something it hasn't done in 3 months, and we put in a lower low. We put in our very first lower low here today, Wednesday, for the first time going back to the beginning of March after we finished that big initial COVID drop and then have had the big reversal. So if we did see gold put a little interim high in around 1760, I've got a couple potential spots here. Short term, we could see a move down to around 1646. That'd be right at the 382 fib, and that's kind of the last little dip down back in the mid to end of April before we made this last push up. Then I'd look at the 50% line down around 1610. And lo and behold, if we make it all the way there, possibly as low as the 618 fib 1573. So we could see some pretty significant pullbacks in gold, which don't amount to anything but pulling that drawstring back on the bow. So if you're sitting on the sidelines watching the gold price bounce as hard as it did in March and continue to come up, you may finally get that entry point you've been looking for.
Yeah, in the next 25 days, that's your chance, I think, before we get into the seasonal strong period. Doesn't necessarily mean we're going to see some huge move come in July up with gold. Just means that seasonally, the probability would make sense that the downside we see here in June wouldn't further continuate probably into July and start to pick up because August is a very strong month with gold. So I think in the next 3 weeks, you're going to have this opportunity to be buying at lower prices. And I think you should be taking advantage of that because we're going to see higher prices as we go into August.
Sure, and to channel the spirit of Tori, who, as we mentioned, isn't with us this week, I mean, once we get into July and August, we're going to be looking at those adjusted quarterly numbers from first and second quarter. So that would be a good time roundabout then when we see what the actual returns were on the equities market, to find a bottom in the gold price, and it will have built up momentum and built up the capability to take that next step up, which I think breaks through these mid-17 numbers, and then we're off to the races going up to test the old highs in the mid-19s.
Silver has moved up above 18, and here Wednesday as we're recording is pulled back down, and so it's had a really good run. From last week, it's up about $1 and pulling back here with gold. So again, this is your opportunity. The gold-silver ratio has moved below 100, and so it is moving in the direction that we had suggested it would after hitting 125, the all-time record high. So it's moving lower as silver is strengthening the gap between it and gold.
Yeah, silver came into this ceiling that we drew there around the $19 mark after we came up and tested just shy of 20 back in September of last year. We made 3 attempts to get back up there over the next couple of months, and then of course March hit and a pretty substantial drop in silver, $5-6. But it has V-corrected, it has bounced up pretty aggressively. Now we came in last week to that range for the first time, so it wasn't surprising to see it turn around. If this was a short-term reversal in silver, I'd be expecting to see it come down maybe even sub 16, which actually would be a pretty conservative reversal. I mean, the 618 fib is down in the 14s of this last move. Now, given the nature of what caused this price move in March.
Yeah, I think that matters.
Yeah, I think that matters, and I think we need to take that into effect. If you take out March through April on this chart here, you really have just sat between 16 and 19, if we just ignore that dip down there. In doing so, I don't know if these fibs are going to hold any water on this short term, but I would like to see silver come down a little bit more personally, maybe to around 16 or a little bit under.
What do you think about platinum? Is it lagging silver? What's going on there?
Yeah, percentage-wise, it certainly is. But I think platinum is the chart of the quarter, personally, because you're seeing after, again, the March fall, which we're going to keep talking or at least keep starting the conversations with. Platinum is, like silver, come back up and testing some of those old pricing prior to that. Now, silver's testing the highs. Platinum is testing the floor. So, and we'll draw this on the chart here, you can see. But following that March fall, where silver V corrected, platinum's done something a little bit different. We've had a jump, a pennant consolidation, then a jump, then a pennant consolidation, then a jump, and now we're having another pennant consolidation. So you could argue we've had 3 drives up. We could see a sell-off here in platinum, I think maybe down to around the 800 level or even a little bit lower. Or we could just keep following that pattern, sort of like gold did a couple years ago when it finally broke out of that range. We kept looking for gold to hit those old highs down, remember the 1200s? We kept looking for gold to hit those highs, and then eventually it blew through and it was off to the races. So platinum for me is the most interesting chart we're looking at here over the last couple weeks, because I think we're both in agreement. Platinum needs to play some pretty serious catch up, certainly to gold, but even more so than silver has. And I think there's some great opportunity there. And closing out with palladium, same concept. I expect to see palladium have a breakout here in the next week or two because we've had this long-term consolidation pennant after the big fall in March. So palladium's still pretty substantially below its previous highs. So part of that obviously does have to do with the March sell-off and the crash, the COVID crash. Another part of that sell-off, I think, really is because palladium was just way overpriced. So we'll have to see which direction palladium goes, but you can see how it's compressing here on the chart right around 2000, which is where we're sitting today, and looking for that to make a decision in the next couple weeks. So I think you're right, Robert, when we were talking about the silver breakout a minute ago. I think everything comes back to what do the charts look like 30, 45 days from now.
All right, well, that does it for the metals. Equities, I think, are up next on our agenda here. With everything going on in the world, what do you think about equities, Miles?
Yeah, I got a question for you, Robert. I mean, we're in the midst of a global pandemic, which is slowing, but still obviously occurring, and in fact may be picking up. And then, of course, we're amidst some other things taking place in the United States. Now, we're not a political show. We're not going to discuss that here. But I do think it's important to recognize, given the nature of what's going on a day-to-day basis over the last week, or even just over the last couple days, it makes a lot of sense to me that the Dow would be what direction?
Sarcasm is the lowest form of humor, Miles.
That's all I got, Robert.
Okay, yeah.
That's all I
it's
got.
Moving higher, so yeah.
5.5% this week.
Throw chaos into the mix, and yeah, the stock market should move higher, right?
Right, because there's a whole bunch of Americans just sitting at home buying stocks right now. That's exactly what's going on. That's what I'm seeing on the news this week, is Americans just sitting at home buying Amazon.
Mm-hmm.
So here's my big question, I guess. Why? Why are we seeing this type of equity reversal continue up? Where's that money coming from? Could it be risk on investing? Well, what's the dollar doing?
Yep, dollar's sliding down just as this equities market is sliding higher.
Yeah, we've been talking about this floor in the dollar for weeks and weeks, and man, just in the last week, it has gotten blown out of the water. So the dollar's now down, about 5.5% since it hit that high. You could argue this is money coming out of treasuries going back into the equities. I don't think you can argue this is the American public doing the investing. So my question would be, where's the gamemanship? What's trying to be accomplished right now? Follow the rich guy. What's he doing with his money over this past week while the news is directed towards the chaos that's taking place specifically in the United States and some in Europe as well? What is occurring right now in the equities and the dollar market that we're going to see the reaction to over the next 30, 60, 90 days, where we can look back and say, remember when nobody was paying attention back in the beginning of June? Well, now we're here. So that's kind of what I'm trying to figure out, is what is the reason behind this?
Speaking of the dollar, there's one topic we can cover that's related to the dollar index that I think probably, with everything else going on in the news in the States, probably got overlooked pretty well. Probably was overlooked in the United States a lot. And it was something that last week I talked to a client about because we were looking at the dollar index last week, and the dollar index last week hadn't broken down yet to where it is now. It was still like 99 something. And what happened actually in Europe, the European Central Bank, there was a court decision that made clear that the European Central Bank's quantitative easing program did not respect the, quote, principle of proportionality, end quote.
Which is a fantastic European way of saying what? Explain.
I'll try. So it's saying that their program, that they were printing money, quantitative easing, just like the Fed is, they didn't respect the proportionality of it being distributed among the member states. So there was unfairness going on. Well, a lot of the ECB and the European Union figureheads, they kind of just scoffed at it and thought, well, we make the rules, you don't. And so even though it was a court decision, they just kind of didn't want to even give it attention. So obviously there's some politics going on there. But related to the dollar index, the Fed is obviously creating more and more dollars, ballooning their balance sheet. At the same time, the ECB has their quantitative easing program. So if you look at the percentage of the euro that makes up the dollar index, it's pretty high. The euro makes up something like 57%
Right. Biggest currency competitor.
Biggest currency that affects the dollar index. So dollar index holding around 100 would mean, okay, the Fed's printing a bunch of money. Why is the dollar index not falling? Well, it's because the other guys on the other side of the pond are also doing a quantitative easing program. So it balances it out pretty well to where the dollar index would sit flat, even though the Fed's printing money. The Europeans were doing it also. So the idea of the European Central Bank's quantitative easing program maybe being called into question could potentially turn off the spigot temporarily, possibly longer term, could turn off the spigot of euros being printed. And at the same time, the Fed is continuing to print dollars. So what does that do to the dollar? It would weaken it relative to the euro. So I think that may be what we're seeing because of this court decision. Maybe there's some other things going on there too, but I think it directly correlates with the dollar index moving lower because the euro potentially may be getting stronger with the potential of this court decision affecting the ability for the ECB to print. A lot of information there, but I think there is some correlation that's going on in this last week with the dollar index sliding lower. We'll see where it goes from here.
So you're saying in the world of international currencies, the euro and the dollar are probably the two biggest competitors against each other for liquidity. So it's like two gas stations on opposing street corners. Since you have the options, they can both keep pricing low because they're competing against each other.
Good
That's
example.
why gas stations
Absolutely.
always set up on
Right.
the same intersection.
The flow of
Right.
money is about on par together. That's why the dollar index, I think, didn't take a huge hit when the Fed printed a few $1 trillion here in the last couple months.
Right, and if one of those gas stations stop getting their gas trucks in,
Right?
it ends up negatively affecting both of those stations. And that's what we could be seeing. And I think I like that point because I've been wondering over the last couple days, obviously we know why the dollar's going down on the grand scheme of things. It's because we're printing more than we ever have. But what caused the kickoff over the last week for it to finally break below? Because the dollar index, like you said, it's relative. It's relative to all the other currencies. So it doesn't just measure inflation or deflation. It measures those two things against everybody else, not just against itself. So I'm glad you brought that up today because it gives a little bit of insight as to why we may be seeing the dollar sliding in anticipation of a ruling over in Europe that may slow down or short-term halt money printing in Europe, which, like you said, could be very detrimental to the dollar index and the value of the dollar internationally.
Correct. And we'll see how that plays out as time goes on. But you have these European officials deciding to just kind of scoff at this decision and continue their program.
So I think the moral of today's story is the next 30, 45 days are going to be pretty telling, not just in the metals market to see how the equities market responds to what's going on this week, and then to see how the dollar responds to not just the issues taking place with the ECB over in Europe, but again, we can't forget what's going on with China and Hong Kong and issues there as well. China also being a major player as a currency option. So that's going to do it for Golden Rule Radio this week. We thank you as always for stopping by. We hope you're all staying safe and healthy out there in YouTube land. If you like what you heard, hit the subscribe button, ring the bell. If you have other questions, you can head on over to our website at McIlvaney.com, Twitter, ICA Gold, or Facebook at McIlvaney Financial. And as always, if you'd like to talk with Robert, myself, or any of the advisors here at McIlvaney ICA, you can give us a call at 1-800-525-9556.
Thanks for listening. Have a great week.